Thanks, excuse me. Thank you so much for joining in to this earnings call. And Tata Communications is the business that we're trying to talk to after the first quarter numbers, wherein the data segment showed very strong growth, even as overall margin may have declined. Kabir Shakir Ahmed joins in right now to talk about his thoughts on what were the highlights for the quarter and what does the outlook ahead be like. Of course, we will talk to them about the large acquisition that they did in the last week of June as well. Kabir, great having you. Thanks for taking the time out.
Thanks for having me, Neeraj.
Our pleasure is ours. Kabir, how did you look at the quarter? Because you look at the data segment, did well. X switch, you could argue that some people say that, oh, the numbers look slightly different as well. How have you analyzed these numbers, and what was the one big positive according to you, and was there a one big miss according to you?
Neeraj, firstly, this quarter is a very, very important and a pivotal quarter for us.
Okay.
We probably recorded highest ever growth from any aspect we might look at. Our reported growth for the data business is 70.1%, but absolutely we will be responsible enough to report underlying performance as well. Our underlying performance, excluding switch of 2 months, is still a 14.3%, data growth, which is one of the highest that we have actually done. Even if I were to include voice, which has not been our focus area, including voice, which is a declining business, our growth rate is 10.3%. So
this is YOY, right? You're talking about YOY.
In the double digits, yes, absolutely. And quarter on quarter of 4.4% growth is a very, very respectable, quarter on quarter growth. So overall, from a growth perspective, I think we are absolutely delighted. Within the data segment, if you were to look at core connectivity, which we've always guided, or said that it will be in the range of mid to low to mid single digits, has grown at 8.1%. So even that cylinder is firing. Our digital portfolio has grown at 37.5%, excluding switch. It's still 28%, which has again been one of the highest that we have recorded. So I would say all cylinders firing, all guns blazing as far as the top line is concerned. We've been speaking for many quarters, and I've been telling you that our focus has been to rev up the growth engine. Our focus is every other functional strategy supporting the business in its growth endeavors, and which is what is playing out today. Fourth quarter of consecutive double-digit growth, but more importantly, when we announced in the Investor Day that we will, our ambition is now to double our data revenues in over the next 4 years. This is clearly the first positive step in that direction. So I'm quite gung-ho about it.
Okay.
I wouldn't say there is any miss at all in our numbers, because everything else, and I'm sure you have questions, and I will answer them, have all been on strategy, on point, and I'm happy to explain further.
No, I think I'm just looking at the numbers. QOQ, you're talking about the YOY growth. QOQ 2.5 questions there, but just wondering, why would you look at them YOY? I mean, wouldn't you look at them sequentially?
We look at both because where there is usage, we try and look at them, QOQ, because that gives me organic trends and are their consumptions going down, and stuff like that. But otherwise, sometimes QOQ has seasonalities in it. And like, for example, and I don't want to explain the same thing every quarter again. You know what? The working days are lower. It's Christmas. So therefore, why you see Q3 is lower than that of, Q2. So you give that explanations when it comes to on a quarter basis. It's an important marker for the management to see if usage drops down, other than the known bits. Outside of that, I think YOY is the right important metric for any business.
Okay, fair call. Now, because I've analyzed some parts of your business QOQ for this quarter, I'll stick to that. You can choose to explain on the YOY basis as well, Kabir. But I'm trying to understand if the data revenue growth, and I'll start with that, which was, let's say, sequentially too, was about 2 to 3% in the previous 2 quarters, is now northwards of 4%. Is this a building up of a trend, or you would want to still play it by the year as you deliver on quarter 2, quarter 3, and quarter 4?
Well, look, I don't want to give any long-term guidance or anything of that sort outward, but this is our ambition. So if we see, when we said we want to double our data business over 4 years, you can do the maths and arrive at CAGR. But it will have lumpiness, when we bring in, because we are a B2B business. There are going to be transformative deals that will actually, come into play. There will be inorganic acquisitions. When we were, talking about ambition, we had not concluded, on the Calera, thing at all. So that was one of the targets that we were evaluating. So all of this will hamper that. But overall, if you actually, look at it, that's our ambition. When I unpeel that particular ambition, we should be growing at 3 to 4% every quarter. That should ideally be the marker. But I won't really worry about it, because as long as I see the pipeline, as long as I see the customer conversation that we're actually having, and if certain deals slip from one quarter to another, it's a matter of time, and it's a matter when the deal gets curated into revenue. So I wouldn't worry too much unless I see any organic, trends of slowdown or anything of the sort, which thankfully we are not so far seeing in Tata Communications.
Yeah, you are not. And you're also, the good part is that you're probably seeing some fairly strong EBITDA trends as well, because even if I don't adjust for Switch, the number was recent. If I adjust for Switch, then losses, then the number is even better. Tell us a bit about that.
See, for the quarter, we've come in as 21.5%, EBITDA is what we have declared. Our ambition has always been 23 to 25, which is what we will stick to as well. But as we make strides, in this area, it is bound to have short-term margin dilutive effect. Switch has, anywhere between 80 to 100 basis points of margin dilutive effect. This quarter was about 70 basis points. This quarter was also had a one-time impact on the acquisition costs, because we announced Calera on the 28th of June. We had to record all the costs that we incurred as a result of that already in our books. So that was roughly about a percentage, 100 basis points was the impact of those one-time expenses. Now, should I call it one-time? Because I would like to rev up the M&A engine and keep having it. But if I have to give you a normative comparison, it is already at 23.1 as opposed to the 21.5 that we have reported on a reported basis. Underlying looks at around 23.1, which is a fairly a good place to be in. But I've also stated that for strategic reasons, if we have to depart from the 23 temporarily to 22 or 21.5, I'm absolutely fine to do it. It must be a good strategic and a responsible reason. When we close Calera and when that gets integrated, it's a listed company. The results are out in the open for everybody to see. It is going to have a dilutive effect in the short term. But we are hopeful that the synergies, and I'm sure we'll talk about Calera later on, hopefully those synergies will come into play, and we should be able to get it back to our ambition of 23 to 25 in the near to medium term.
Got it. Just before I get to Calera, though, a word on Switch as well. That integration, I'm sure, is now whole and truly there. You happy probably with the workings that are going on. Give us some sense. I know you don't give exact guidance, Kabir, and which is fine, but give us some sense of how do we see this panning out, if you can, not just from a 1 quarter perspective, but let's say over the next 3 or 4 quarters.
Look, Neeraj, the integration is going on. I won't say integration is complete, as yet. It's 2 months. 1st of May, we closed the deal. As we speak, the integration is happening. We do certain day zero integrations, and we prepare for it even before the close, so that I need to consolidate results and report to this one. And customer, connects and relationships and all of those things need to happen on day zero. But then there are lots of other processes which needs to get integrated. And I'm a fan of looking at who's got the best practice. If Switch has a best practice, I would rather learn from them. It is not imposing just because we are the acquirer that we only impose our process onto them. But at the same time, they were a privately held company. We are a publicly listed company. So there are certain compliance requirements that we have as a listed company, which need to be done as well. So all of those activities are happening as we get along. 2 months of results have been integrated. We are quite positive about it, and I see that we can do a lot more by extending our offering to Switch customers, bringing in Switch offering to our customers. So there is a lot of synergy that is yet to come about. And those are the conversations that are today happening. Those are the relationships that are getting, re-established jointly between Tata Communications and Switch. And I'm quite positive and hungry about it.
Okay. Now, to Calera as well, it's a large acquisition. CPaaS as a space is active. 2 days ago, an Indian set of promoters sold out to a global company. You've gone out and bought Calera as well. It's a large acquisition even by your size and standards. Tell us a bit about what's prompted this. I mean, we know that basically it helps you in your data, doubling of the data business at some point of time or once it gets integrated well. But talk to us about Calera, please.
Well, CPaaS, or I would say CMP, customer management, platform, is a very interesting and an evolving space per se, and it's been one of our strategic areas. We launched DIGO a couple of years ago, and clearly this will accelerate the ambitions that we have for DIGO. In fact, a lot of, I would say, product features and capabilities that we want to build onto DIGO, Calera has already got it, and so therefore it will help us expand in a big way. The second thing I say is Calera is a truly global CPaaS player, so it has given us that global footprint. Plus, I also see a lot of complementarity in terms of the customers that they serve vis-a-vis the customers that we serve. They're quite strong in the US, so I give a very, very good holding in the US. They're quite strong in the BFSI segment. So a lot of complementarities that I actually see between Calera and us, and I think it will be a great asset for Tata Communications. It will really propel us in our ambitions, both on the collaboration and connected systems portfolio, as well as the digital and data portfolio as such. So I'm super excited about a lovely global asset that's come to us at a great price.
Some of the notes that had come out when you did this acquisition, and I'm referring to a couple out there, Kabir, and they talk about the near-term impact versus the long-term potential, how relative to the peers that Calera has too, their operational efficiencies aren't quite up there, and you will have to put in some effort to try and do all of that. So I'm sure you've thought all of that through, obviously so, but would just love to understand how is the medium term shaping up in terms of that, because we know the larger picture of why you've done that, but would love to know the intricacies if you're able to share.
Look, the deal is not closed. It will take us, a few months to close the deal. I'm hoping it's sooner than before. I mean, so it's indicatively 6 to 9 months, but maybe sooner. So at the moment, what we have is a plan for a plan, because until the deal closes, there's nothing that we can do, in action per se. So what we have is a very, very detailed integration plan. In the go-to-market area, in the product area, in the engineering area, in the back office and support, services space as well. But my biggest focus is in the first three that I actually mentioned, as to how will we integrate and have one face, to the customer, because these are even today as we speak, we are competing products, right? DIGO also and Calera meets at every customer opportunity, and we compete with each other, and we will have to then soon decide when Calera becomes part of Tata Communications, how are we going to address this. There is an engineering development. They have got strong set of great talent that's there all over the world, and a large presence in India as well. We have a large presence in India and in Singapore, so we need to obviously think about integrating our product and engineering organizations as well, have a common roadmap, and all of that will set in once the deal closes. So there are independent work streams that have been identified, like typical of any M&A integration that you actually would see, is what has been today being worked out by the program management team, and we will put them into motion once the deal closes. But a lot of preparation ahead of that is happening within Tata Communications as we integrate. As you rightly said, it's a big asset. They have a global presence, and therefore this is not something we can take lightly. It's only 5% of the effort that has gone in the due diligence and acquiring the asset. I think the 95% really goes in execution and in smoother and faster integration of the asset into Tata Communications.
Got it. The NCD fundraise that you've announced, is this preempting something, or is this more in preparation for the needs that are existing currently?
No, this is BAU. There is a legal requirement in India that I need to intimate the stock exchanges when it's being deliberated, and an internal committee has been formed and authorized by the board to take that. We have a regular refinancing need for loans that are maturing in December and January, and this is basically looking at the market, and this is I would say a continuous review that the treasury team does on the market. So this is BAU.
Fair call. My final question, Kabir, and next quarter when we talk, we'll talk about the YOY numbers in proper detail, but I would just love to understand. Okay, I just lost your view for a moment. I would just love to understand, Kabir, when you look at the next 3 quarters, I'm not asking for a guidance here, but I'm trying to understand what is it that you look forward to the most, because you've done a bunch of things. That there's Switch, there is Calera, there is business as usual, reducing voice revenues, which is as per guidance, but data is seeming exciting, and probably a bunch of other things you're doing. What is the thing that you look forward to the most? What is the thing that you think analysts should look forward to the most over the course of the next 3 quarters?
Look, I mean, firstly, if we see where we were, 2-3 years ago to where we are now, we have a strong balance sheet, and the balance sheet is today helping us to and given us the license to dream about doing acquisitions. So we have integrated Switch, we have announced Calera, and it's a small one, but we've also announced taking the minority stake as well and making Oasis the 100% subsidiary of Tata Communications. So all of these 3 M&A activities have happened. The top management focus is to kind of divide and conquer, so that I cannot take my eye off the ball on execution and delivering my operational performances quarter after quarter. Now that engine needs to fire. That cannot get distracted. We need to have a very different set of capabilities and engine that needs to go in for M&A integration and make it part of that. And I would also like to not stop and continue to scan for competitive targets that may be available at great value for Tata Communications. So this is not that we have done it now and we're going to take a break. We need to continuously work on this. Underpinning all of this, and I have said this time and time and again, for me the biggest priority is growth, and growth. Providing value to our customers, and therefore that translated in the good quality, competitive, sustainable, responsible, profitable growth is what will then also offer, I would say, value to all stakeholders, including my shareholders. So the focus and priority is growth, and we do not want the management time to be, taken away from any of those things. We have the regular rhythms of corporate imperatives that we set, targets, for the business. So all of that are guided by the company, vision that we have, strategy on a page that Lakshmi has many times talked about. So all of those things are our guiding forces, and it has been quite busy for us in Tata Communications, and I like being busy.
Yeah, who doesn't? And especially in these times when the growth numbers are looking the way they are for the country at large too. Kabir, great talking to you. Thank you so much for taking the time out, giving us a color. We talk YOY the next quarter, and all the best for all the quarters ahead.
Thanks a lot for having me, Neeraj.
The pleasure was ours. And viewers, thanks for tuning into this leg of BQ Conversations.